Hi, we continue with the second case in our advanced financial modeling section, unit 5, and now we're going to create a short tax calculator for salaried individuals. We already have the following data where we're given tax slabs. If salaried individuals are taxed under various tax slabs, and in this context, for example, these are the slabs which are available. And if someone's salary is, for example, 2 lakh in India, then there is no tax. But if the salary is 12 lakhs, then essentially up to 2.5 lakhs, there is no tax. From the 2.5 lakh to 5 lakh income, there's a 5% tax. So 5% of this 2.5 lakhs, which is going to be 12,500. Then from 5 lakh to 10 lakh, there's a 20% tax. So that's 1 lakh rupees that come out here. And the remaining 2 lakh rupees will get taxed at 30%, so that's 60,000. So that's the total tax that's likely to be paid. There are, however, some exemptions that are allowed. So if you have a home loan, then the interest component of that up to 2 lakhs, there is a benefit. If you have a home loan, then there's a principle that comes under Section 80C, which has other instruments as well, which is investment in ELSS, insurance premium, PPF kind of insurances, up to 1.5 lakhs total maximum during the year, right? So if someone has done these two as well, then basically that will get reduced from the taxable income, right? Now that's what we basically want to construct as a simple tax calculator that gives us this data. So we'll go to our Excel file, and those are the details that we find here. Right now what we're going to do is we're going to input some of the cells. So the salary is going to be an input, so let's color that. All these details are going to be an input, let's color that. Then we're going to kind of take some calculations here in terms of the interest rate, tenure, etc. And if the home loan is yes, then so let's also put a drop down here which says yes and no. So I'm going to put a yes here and a no here, and maybe we can hide those later on. But let's first introduce a home loan drop down here. So we go to data, data validation, allow a list, and the source of the list is these two, right? And click on OK. So we have a yes no calculation here. Depending on what the value is, we will incorporate the data. Let's assume the interest rate is 8% and the tenure is 20 years, right? Home loan amount, right? And that basically comes here. And then eventually what we're going to do is we're going to arrive at a taxable income. A taxable income is what we're going to arrive at. And that's the number we are going to kind of, let's say, and remember in the home loan amount, whatever is the home loan that you've taken, that will become an input just like these cells typically. And we have to calculate the interest component, right? And then let's also insert a small row here. Let's say total ATC. Under section ATC, these data points are given. So that's here. And then we can arrive at what is called as the taxable income, right? We can arrive at what is called as the taxable income. And based on the taxable income, we're going to calculate the taxes here, right? So let's first start with a number that is big enough so that we can incorporate all the data points. So we put 15 lakh rupees as, let's say, the input cell here. We can put any random numbers here, let's say 34,580. There's an insurance premium of 23,000. There's a PPF investment of, let's say, 75,000, right? These numbers could change, but we've just made some calculations here and put it here. Let's say Alt plus. That's the amount. This only up to 150 is exempted, right? Exempted up to 150. Let's say home loan amount is 60 lakh rupees, right? That's the home loan amount that is there. If this is the home loan amount, can I calculate what is going to be my payment during the year or during the month for that matter, right? Can I calculate the monthly payments that is going to happen? So what I'm going to do is EMI calculations, right? And I'm going to put month 1 and month 2 and so on and so forth. So my EMI is here, my interest is here, and my principal is here, right? Can I do that? So EMI would be PMT of the rate, that's the rate, divided by 12. N per, that's the number of periods, multiplied by 12. The present value of the loan, let's put that as a negative number. Future value is going to be 0, and that's what we are saying. So that's the EMI that we get, 50,000. Now what is the principal component out of this? That's going to be PPMT, principal payment. Same rate, this divided by 12, correct? This divided by 12, comma, tenure, that's going to be 20 into 12, right? Sorry, that's the period that we are looking at. So that's the first period that we are looking at, and that will keep increasing as we go along, right? And the present value is minus 60,000. Future value is 0, close, and that's the principal payment. What I'm going to do is I'm going to put this as 1, 2, 3, 4, 5. That's the month we are looking at, right? Now, and this one here, we can link it to the month. So that gives me the principal value, and the interest is going to be A minus B, right? Now, EMI is going to remain the same. So that's going to remain the same for all the 12 months of the year. This data will have a certain frozen aspect. So we're going to freeze this, we're going to freeze this, and freeze the present value, and pull this down. So that's the component here. And the difference between these two is going to give me the interest component, right? That's the interest paid for the year. So I can say sum of this entire interest for the year is what is being paid, and that's only up to 2 lakhs, which is exempted, right? Now let's just calculate this data here and find out the taxable income. So taxable income is equal to my total income minus maximum of this value, or sorry, minus the minimum of this value and 1.5 lakhs, right? That's the data given. So I've subtracted the minimum of these two and minus the minimum of this value and another 2 lakhs. So we get this value because up to 2 lakhs is what is exempt, right? And that's what we get. So we use the function min. Minimum between 1,32,580 and 1.5 lakh is going to give me 132, and then minimum of this and 2 lakh is going to give me 2 lakhs, right? If we want, we can actually check how this works. So we can go to formula and we can evaluate the formula. So you see this evaluation of the formula. Let's evaluate. So 1 lakh, 15 lakh minus the minimum of these two, and then the minimum of these two is going to give me 2 lakhs, and that's going to calculate the final value and calculate and give me the answer, right? That's the data. Now the tax calculation comes. in terms of cumulative data that is available. So we are going to create some tax points, and that's the margin points. Let's say 2 lakh, 5 lakh, and 10 lakhs, right? And let's put this here. Now, what we are going to do is remaining taxable salary. That's what we are going to calculate here. We can always hide all this at a later point of time. We don't need to show all this. So we are saying that the first one is my total taxable income minus this. Remaining is this minus this, and then this minus this, right? As long as this is positive, you have to calculate the tax slabs and put it there, right? As long as this is positive, you have to calculate the tax slabs and put it there. In other words, you're basically calculating 0% tax till here, so that's 0, straight tax calculations, right? Now, after that, what is left? So, given that this entire calculation is about 11 lakhs, I'm going to basically subtract and calculate it based on this. And there's a small error we have done. We can remove this, not needed, right? Now, we have to look at the cumulative components of taxable salary. How much is the salary till here? And then how much is it between these 2 points? And how much is it between these 2 points, right? Given that the total salary is higher, then you are basically calculating whatever is the taxable income minus this point and calculate the tax based on that. So what we can do is we can put the remaining taxable salary as this minus, so after this point is calculated, we get to here. If we reach here and it is positive, then this minus the difference of these two, another 2.5 lakh gone, right? Then this minus the difference of 10 lakh minus 5 lakh and another is gone. And if this is positive, then that's the extra salary, that is the remaining salary that is there, right? As long as these numbers are positive, we are going to calculate the tax. If it is not positive, then we are going to take whatever is the remaining taxable salary in the previous slab and calculate it based on that, right? Let's assume the salary was 7 lakhs. If the salary was 7 lakhs, then your taxable salary is 367, in which case initially there is no tax. The remaining salary has to get taxed at 5%, and then if this is positive, then it gets taxed here, otherwise it doesn't, right? Think about it. So let's put 15 lakhs here again, and now let's see what is the salary taxation going to be. So is equals, this is 0, that's fine. Now here we put an if loop. If this number is greater than 0, correct? If this number is greater than 0 after passing this through thing, this entire thing, then there is going to be a taxation which is going to be 5%, or there's going to be a value which is going to be minimum of So let's actually build it slowly, remove the minimum here. This is going to be 5% into the difference between these two slabs, A minus B, right? Else it's going to be 0, right? So we see 12,500. Now the challenge that will happen is what happens if the salary is, let's say, 7 lakhs as we saw it there. Now your taxable income is 367. You should not be paying this entire amount. You should be paying a lower amount, right? You should be paying a lower amount, which basically means that if this value, the remaining taxable salary, is less than this, then there is a certain different calculation less than the difference of these two, right? If the remaining taxable salary is less than the difference of these two, then we are going to have a certain calculation. Otherwise, we are going to add the entire thing, right? So what we are going to do is we're going to change this slightly. So tax points is between 0 to 250. This number is 5 lakh minus this. Let's put it here. And I'll change these calculations as well. This number is 10 lakhs minus 5 lakhs. So this is the incremental tax slabs, right? So incremental tax points is what we are looking at, right? Now what we are saying is that as long as this number is greater than 0, then we are going to calculate a 5% tax on D7, right? As long as this number is greater, then so there are two components which is going to come. The first component is that this needs to be greater than 0. Otherwise, it straight away goes into this. Secondly, we're going to add another if loop. If this number is greater than 250, correct, then 5% into 250 into D7, else 5% into this number here, right? And close this bracket. That's the if loop that closes there. And final if loop closes here. We click on OK. And now we see that this salary, remaining taxable salary, calculates this data here, right? So that's B26 minus D6. Then now let's increase this a little bit. Let's take it to 10 lakhs. If we take it to 10 lakhs, then the entire slab gets taken care of. I'm now going to subtract this to see how much is left in the next slab. How much is left for the next slab to get taxed upon, right? And this is now going to get taxed on. So I can actually just drag this down. This remaining component gets taxed at 20%, correct? And if I put this as 15 lakhs here, then obviously the entire component gets taxed, and we see what is left here, and we say the same thing here. Now there's no upper slab here, right? So this is going to be directly, if this value is still greater than 0, then 30% into whatever is the value left, else this is going to be 0, and that's the value we get, right? So let's put the formatting on this. Let's see what happens if the taxable salary is 10 lakhs. You see, as long as this component is greater than 0, it will get taxed. On 10 lakhs, the total taxable income works out to something like 667. 667 up to 250, there is no tax. 250 to 5 lakhs, there is a 5% tax. And above 5 on this 167, there is a 20% tax, which gives you the total taxable amount here. So I can calculate my total tax is going to be the sum of these 4 items. Right now, whatever I change this to, if I put this to 7 lakhs, then that's the only tax we are paying. If I change this to 25 lakhs, then that's the tax we are paying. If we increase any of these numbers to 87,000, let's say we change the data of ELSS to 87,000. What's the max break you get? That's 1.5 lakhs and 2 lakhs here. If I say I need to put in one more number here, if I say there is no home loan, if there is no home loan, then automatically this calculation should become 0. So interest component should be dependent on this. So if, and open bracket, if this is equal to yes, then you do that sum, else you put 0 here, correct? So only if I select this as yes is when that calculation is going to happen, and that's basically the inputs I need to put in. Once we put in the inputs, it's all automatically going to calculate the data. If I change this to 30 years, then obviously interest component, the principal changes, interest remains the same. If I change this to 15 years, then principal component becomes slightly bigger, EMI becomes bigger, interest remains the same again, right? That's basically the crux of our tax calculator. So we've calculated the tax calculator as well. Incremental tax points is what we have calculated. These are the tax calculations we're getting. That's the total tax payment that we have to do. And we can then divide each of these by the total income in hand. We can get the salary in hand as this minus the tax amount that's going to happen, right? That's basically the simple tax calculator that we have built in. Primarily 2 or 3 functions used: if, loop used, a drop down menu used, the principal and interest components used, and the function min is used. So 4 or 5 of these functions have been used, which give us the total value. That's it in this particular video. Thank you.